So as you may or may not know, I've been investing in stocks and shares for the past 10 months now, almost a year, believe it or not. And I mainly use a platform called Trading 212 where I invest in individual stocks. But part of this journey which I'm on, I think it's really important for me to continue to learn and continue to educate myself. So I watch a lot of YouTube videos, I read a lot of online articles, and I read a lot of books. And the current book which I'm reading is called The Coffee House Investor by Bill.
I promise,
Yeah, I won't even try to attempt to say his last name. And this book is a really good book for investing beginners and has simple advice to follow, which I can appreciate because when learning something new in investing in finance, it can be quite complicated and a little bit overwhelming for a beginner. But this book really simplifies investing and talks a lot about indexing, which is basically investing in index funds, which is going to be the topic of this video today. I'm going to be talking about exactly what index funds are and some of the benefits of investing in index funds. But before I do so, I just want to encourage you guys to like, comment and subscribe to help me grow this channel and hopefully reach more people interested in starting their own investment journey. So what is an index fund? Now, we have all heard the phrase, putting all your eggs in one basket. And when you're investing in individual stocks like Coca-Cola or Amazon, that's essentially what you're doing. You're putting all your money in one company. So if that company does well, fantastic, happy days, you've made some money. If it hasn't done very well, you've potentially lost a bit of dollar.
I don't know Wagwan, but that can't run. That can't run, fam.
An index is essentially a group or collection of companies, such as the FTSE 100, for example, which is the top 100 best performing companies in the UK. An index is also not limited to geographical location. So an index can also be a collection of companies from a individual sector or industry, such as technology, finance, or even green energy. An index fund is a way of investing in all those companies at once, essentially putting all your eggs in different baskets. Investing in an index fund allows you to diversify your portfolio, which basically means minimizing your risk by putting your money in lots of different companies rather than putting your money in one company. So within that index, if you know that one company is currently down, another company might be up, and it just reduces the risk of you losing your money. At this point, I just want to cut back to a previous video which I did with Kurtz the Accountant, where we spoke about our mistakes investing in the stock market. As when I started investing, I just jumped straight into it, started investing in stocks and shares and avoided index funds.
So Benjamin Graham basically said that the average investor can make better returns just investing in tracking in an index tracker. So that's basically a vehicle that tracks the whole market. So if you've got a FTSE 100 tracker, it'll just track the FTSE 100, like all the shares in the FTSE 100, and it'll just track that. And the average investor can actually make more money doing that than picking individual stocks, because there's a lot to picking individual stocks that people don't understand.
So as Kurt referenced, you can actually make more money as a beginner investing in index funds rather than individual stocks. And as we've seen, and as history has taught us with the FTSE 100, which I mentioned is the top performing 100 companies in the UK, the average returns historically for that individual index is around 7%. And for the S&P 500, which is the top performing companies in the US, the average return historically is around 10%. For a beginner to gain 7 to 10% returns on their investment is a great return. And if you consider as well interest rates at the minute, if your money was just sitting in a bank, you'll be earning a very, very low interest rate, when in fact you can put that money in an index fund and potentially be earning on average 7 to 10% per year. Indexing is also one of the most common forms of passive investing. And when I say passive investing, I mean putting your money away for a long term. It's the buy and hold strategy for that long-term horizon. So you're putting all your money away, you're forgetting about it. You don't have to worry about the prices of stocks and shares rising and falling. It just removes all that emotion from it. And you don't have to worry about trading and selling and buying. It's for the long term. And over that long term, you'll see that index fund investing will actually outperform portfolios where they are actively managed by a fund manager or you individually buying or selling stocks. So again, another positive of investing in index funds. Index funds also have very low fees compared to mutual funds, which are managed by a fund manager. If you take Vanguard, for example, which is a great platform for investing in index funds, their average fees are around 0.2%. So if you invest £100 into an index funds, you'll essentially be paying fees of around 20 pence, which is a very, very low fee. And my last point, I want to really emphasize the power of compound interest. And what compound interest is essentially is where your money starts making money on top of money. So keeping your money in an index fund, you can actually have two different types of index funds. You can have an income index fund where any kind of dividend payments as a result of holding those particular stocks in that index are paid into your bank account and you can freely spend it on whatever you want. Or you can have accumulation funds, which is essentially any dividend payments is reinvested into that particular index. So again, your money starts making money on top of money. Now, I hope you found that useful. I will be doing more videos on index funds and sharing kind of my personal experience on how I'm getting on with investing in index funds in the future. So make sure you subscribe to my channel to stay up to date on that. As I mentioned, this book, which I'm currently reading by Bill, as we know, the Coffee House Investor, highly recommend that book if you're a beginner getting started in investing. I will link that in the description below if you fancy purchasing and educating yourself on index funds. So yeah, thank you again for coming along, supporting the channel. I really appreciate all your support and I'll see you again next time. Take care, guys. Bye-bye.